Just because you've got a lot of big YouTubers that have a lot of money to be able to just take their money out of the market and swing trade it however they like, which is, again, their decision. And if they have a very unique sort of analysis on how they come to that decision, then I respect that decision 100%. It's up to them. But just because they're doing that does not mean that everyone else, the plebs, the peasants, all of us could do that. It is very difficult to time the market. It is one of the most difficult things in the world. Trust me, I've tried to time the market, lost a lot of money doing that, or didn't make as much money as I should have just by holding and being patient and letting it play out in the long term. And this headline that just came out is it breaks my heart because I've been through this. I've been the people that have done this, and it's really, really sad for this to have happened. Bloomberg reports, in a spasm of panicked selling early Monday, retail investors offloaded a net $1.36 billion worth of stock by noon, 12 p.m. Most of it in the first hour, by 9:30 to 10:30 a.m. 9:30 is when the market opens. According to data compiled by JP Morgan Chase and another Peng Cheng strategy company. By their estimates, share disposals were 3.9 standard deviations heavier than the full day trading average in the previous 12 months. So think about that. In around the first hour of trading on this Monday of this week, probably January 22nd, I believe, retail traders or retail investors panic sold $1.3 billion when they saw the stock market's dropping. The retail morning exodus was a stark about face from recent sessions when diehard day traders snapped up a record $12 billion of equities during the 2 weeks last Tuesday. Now, while the rush for the exits helped drive the NASDAQ 100 down almost 5% in Monday morning trading, it's possible the news wasn't entirely bad for bulls on the lookout for signs for seller exhaustion. The reason for this is because major averages staged a breathtaking reversal in the hours after the wave of sell orders. So in the first hour, there was a bunch of sell orders coming down. And then towards the end of the day, a little bit of a reversal. Stocks ended higher, erasing a 4% plunge in the S&P 500. 4% for the S&P 500 is big. I mean, the S&P 500 correcting is around 10%, and like a mid-correction is 5%. And we haven't really corrected 10% in the past 19 months. So we're getting closer and closer to that. And then we just reversed as the S&P was trying to get closer to that 10% correction that it hasn't had in months. Measures of share volume and severe price action in certain trading vehicles suggested to some that the worst of the selling, at least this round of it, was reached. Now, the reason I wanted to talk about this is because whether it comes to Palantir or any other stock you own, it's being decimated right now. Like, it's being absolutely destroyed. And when stocks are being absolutely destroyed, it's important that your moral and your spirit does not get absolutely destroyed. This is actually ridiculous because I just came out with a valuation model around Palantir. I did it with an investment banker. I'll link it in the description. You need to watch the entire thing to really understand the potential of Palantir. I don't want to give away the price targets, but by 2030, if Palantir maintains a bull case is what management is basically saying, of 36% year-over-year growth, operating at a 35% adjusted operating margin, the 2030 payoff, which is 8 years from now, and if you're an investor, you should have at least a 5 to 7, 8 year, if not 10 to 15 year time horizon on the investments you make. If not, you're a swing trader. And if you're a swing trader, you're going to get swing trader returns. And if you're not that good at swing trading, you're not going to get good returns. The bull case price target, I'm not going to give it away, but let's just say it's more than a 10x bagger from prices in prices around September. Now that the prices are being decimated for Palantir, if we assume that bull case valuation model for 2030, that again, link in the description so you can check it out, this is cheaper than dirt. Like, I don't know how much dirt costs, but the price of Palantir is literally cheaper than dirt. And it's not just Palantir. It is lots of other companies on the market that are being absolutely destroyed. And it happens time and time again. Market selling, algorithms, geopolitical events, Russia and Ukraine, inflation fears, supply chain stuff. All of this stuff, guys, eventually goes away. This stuff doesn't last forever. Inflation will go away. Technology will start having deflationary effects. Supply chains will get better. Omicron stuff is going to start to go away. Russia and Ukraine aren't going to be like doing this whole battle thing forever. The United States is not always going to be this unstable. It's a midterm election year. The midterms will one day go away because we're going to have a new administration. And every year after the midterms, there's an average like 15% increase in the S&P 500 only in the years that are after the midterm elections, because there's always this general bounce that we get when we don't know, when we have more stability over who controls the House and the Senate, and there's not this sort of like political election season going on. I did a video on that as well that you can link in the description. There's like a huge numerical historical analysis for why that's true. There are so many reasons why we're selling off in 2022. And based upon all the reasons that we're selling off, if you just have a little bit of education around why we're selling off, you would also not participate in the stupidity of selling off. Like, and this article to me was so important because in the first hour, $1.3 billion was sold off. In the next 2 hours, all of that money came back. So the people that sold off $1.3 billion, and this was all retail, these were not institutions. So these people were selling their battered stocks to institutions that were happily buying them at the end of the day because the stock price went back up 4%. And how does the stock price go up? People have to buy it, right? It's not that stock price goes down, people sell. Stock price goes up, people buy. Well, guess what? If retail traders or retail investors offloaded $1.3 billion of stock in the first hour of Monday because they saw how red it was and they couldn't stomach how red it was, well, who bought it at the end of the day? It wasn't retail, because like retail investors, if you're going to sell it, you're probably not going to buy it back. And if you do, it's not going to be the majority of the 1.3 billion. It's going to be the institutions that are like, oh, it's time to start buying stocks. I looked at a lot of interviews from hedge funds on Monday, just hedge funds managers. A lot of them, they were just saying, yeah, we're starting to nibble and buy. I mean, even Ross Gerber, and you guys know who Ross Gerber, he said, hey, I'm buying stocks. Literally, it's like, it's time to buy. Now, one of the things Ross Gerber said as well when he did his podcast with me, Kevin, and again, I don't hate Ross Gerber. I don't agree with his views on Palantir. He said in 1987, there were people literally jumping out the window when stock prices fell. Literally, like he said, it was that bad. I think it was Black Monday or something. I might be getting it wrong. It might have been a Friday or Monday. But like the crash of 1987 was very, very bad. And the real ridiculous part of it is he said by the end of the year, or by the end of the next year, everything came back. Literally everything came back. He was like, we were up 20% the year before, we were down 40% in 1987, and then everything came back by the end of the year or the year after. So it's like the people who were jumping out of windows, it was so bad to them because they felt like everything had ended, right? So I kind of metaphorically compare that to people who are just panic selling because they just can't deal with the fact that all this stuff is going away, like their life is over, everything's gone, all the money is gone, so they just have to stop the bleeding. When in reality, if you understand anything about the stock market, and this is coming from someone who's been in it for 3 years and trying to understand the best that I can, things come back up. That doesn't mean that every company that's going down right now is going to succeed in the future. But if you've invested in stocks that are good companies at the end of the day, Facebook, Amazon, to me, Palantir, even if there's a little bit of a risk profile there is no reason why in a bull market or in a market that at least starts to recover, these companies are not going to be seen from institutions and retail as massively undervalued and then be taken up at their bottom prices. That's usually what happens in these situations, which means it's sad to then see all these retail traders and investors that I was once a part of panic sell and have paper hands and not just recognize the value of your money. I think, and this is why psychology and investing is so important. This is why you have all these investment books that are out there that I'm in the process of reading and trying to understand that says the game about the markets is a game with yourself. Because you as one individual are not going to control the macroeconomics that are going on. You have to be reactionary to what's happening and understand what's happening. And some of the best reaction is no action. When you see all the crazy stuff that's happening and you're looking at every charts, I mean, imagine you have 17 computers in front of you, like you're sitting in a Wall Street hedge fund and you're looking at everything that's happening. And then on the last part of your computer, you have your portfolio down 40%. Literally, I'm down 40%. And you just see thousands and thousands of dollars in the red. I talked about this in a previous video. At that point, it's a game to me. Like at that point, it's not real. Like if you're down 20 grand, it's like, think about how long people work to make 20 grand. Like some people work 6-7 months just to get 20 grand saved. And in a matter of a couple of weeks, it's down red. That can psychologically kill you because you're like, I just spent so much of my life getting this money. I took a bet on some companies and all of it's down. The key here is understanding, did you have conviction when you took that bet? And if you didn't have conviction and you just had to stop the bleeding because you don't know what you invested in, then I could understand. Like I could understand buying Bitcoin at 69,000, not knowing what the hell Bitcoin was and just trusting that it was going to go up, or Dogecoin or coin or something. And then just selling it when it starts going down because you're like, I don't know, I can't stomach this anymore. Like I don't even know what I'm invested in. But if you can stomach what you've invested in, which you should be doing, that's sort of the first rule. It's like, don't invest in SOFI just because it's cheap. Don't invest in some hype open door stock just because it's cheap. Not just because it's cheap. Not saying open door is a hype stock, but there is a lot of hype around it. And it does seem incredibly undervalued. But I'm not buying it because I don't know what the hell open door does. So if Open Door comes out with a horrible earnings report, and they're saying, oh, we're losing money in the margins of these houses or something, I don't even know what they do. I don't know how they make money. I just see negative news that comes out for a stock that I have, and it's red, and I want to stop the bleeding, so then I sell. And the problem is most retail investors are doing that. They don't know what they're buying, and as a result of not knowing what they're buying and just feeling the psychological pressure of seeing all this red, they end up selling. My argument is that number is just a number. The market tends to go back up over time. And if you give it time and you put money into the market that you can afford to like not have at the time, and you have conviction in those stocks, the best strategy is to get them even while they're cheaper. And the valuation model that's coming out on Palantir that you guys need to watch, or that's already out that you need to watch, shows you that if you have a 8-10 year horizon, the stock price today is literally cheaper than dirt if we can get to what management's bull case is for the company. And with all the research and DD I've been doing, right, like it seems like that is a potential possibility just given if you are tracking what's going on and seeing what's happening. So don't sell. Like, I mean, that's sort of like my thoughts. It's not financial advice. This is just how I'm thinking about it. Like, it is really, really sad to see this happening. And like, when institutions benefit off of this, this is your wealth. This is your wealth process and your wealth creation that is unnecessarily being destroyed simply because of your inability to understand your own psychology. And I'm speaking to myself just as much as I'm speaking to all these people who sold off $1.3 billion of stock that literally, if they waited 2 hours, they wouldn't have needed to sell because all the money that they lost that morning came right back the next 2 hours. And then they would have felt a little bit better because they weren't down as much as they were to the point where they panicked and they sold. Yeah, understanding the markets is a game of understanding psychology, and that's the only way to really be successful in the markets. Let me know your guys' thoughts on this. Let me know your comments. Looking forward to reading it. My name is Mitt. I'll see you in the next one.